And Bitcoin, more so than any asset in the world, is sensitive to liquidity. When liquidity expands, Bitcoin goes up. When liquidity contracts, Bitcoin goes down. The irrational thing is the blind belief that there is no risk, because everyone shows up to Bitcoin and like it's the classic, I'm new to Bitcoin, I'm here to fix it. And those people just get run over.
Bitcoin's price is incredibly sensitive to global liquidity, and Anthony Pompliano reveals the connection you can't afford to ignore. With liquidity trends shaping the future of Bitcoin, this insight might just be the key to predicting the next big surge. Don't miss it.
M2 global money supply is liquidity, and Bitcoin, more so than any asset in the world, is sensitive to liquidity. When liquidity expands, Bitcoin goes up. When liquidity contracts, Bitcoin goes down. And Joe Consorti recently pointed out that it's about a 70-day lag or so. So if M2 starts expanding today, 70 days from now, Bitcoin will start going up. That's been true since about September of 2023. If you go and you look at Sam Callahan and Lynn Alden did a study, and Sam pointed out that Bitcoin is the most sensitive asset to global liquidity. And so as you see that M2 increase, it's this great thing for Bitcoin. Now what Joe points out is that actually over the last 30, 45 days, M2 global supply has been decreasing. And so he says, look, I'm not predicting a market crash, but if we do get a 20 or 25% correction, then that would suggest that Bitcoin is still just following global money supply. But 20 or 25% drawdown would not be uncommon in a bull market. So the resounding message is we are in a Bitcoin bull market. The trend is up and to the right. There is nothing that I am seeing that is suggesting the bull market is over. Even though people are freaking out, even though people feel like, oh my God, it didn't hit 100K. That's fine. We are in a Bitcoin bull market and things will continue. If you have liquidity, right? I mean, look in 2020 and 2021, we increased liquidity in the market. All asset prices went up. The Fed came out and they said, we're going to drain liquidity from the market. Asset prices went down. So there's a broad kind of correlation between these things. But I do think that there is a very important kind of understanding around Bitcoin in particular, is that US stocks, sure, they have some tie to global liquidity, but really US stocks are most impacted by US liquidity, right? It's all within the same economy. Bitcoin is a global asset. There are hundreds of millions of people that own Bitcoin outside of the United States. And so global liquidity and Bitcoin as a global asset are much more kind of closely intertwined than I think global liquidity and US stocks. And so the more that you see, kind of that this is a global phenomenon, it forces you to pay attention to what is China doing? What are other central banks doing? Because they have just as much impact on Bitcoin as maybe the Fed does. And so you've really got to have this kind of macro, overlay, more so than maybe you would need in the US stock market. You really got to pay attention to what the Fed's doing. But what the ECB doesn't have a massive effect on the US stock market because the Fed will override the ECB. So it intellectually is stimulating for a lot of people because now you're playing a global game. You're not just playing a domestic one. What I would say is when I look at what MicroStrategy is doing, it makes a lot of sense from a math standpoint. If I can sell essentially future equity at a higher price than my stock trades at today, which is really what the convertible debt is, sometimes at a 55% premium, and I can buy Bitcoin today with that money, well, that sounds like a pretty good deal, right? It's because what you're basically doing is you're saying, hey, I'm going to invest in your company at $10, but I'm not going to actually get the equity at $10. I'm going to get it at 15+% dollars a share. Well, why would I not do that? I should do that all day long, right? It's no different than Warren Buffett or anybody else saying, hey, if my stock's overvalued, I issue more shares. If my stock's undervalued, I buy back my shares. This is just a unique way of doing it. And it's a different use of the proceeds, right? So I think that's first of all. Now, the counterweight to that is there's a hell of a lot of people I see saying nothing can go wrong. I'm not in that camp. I couldn't sit here and tell you what can go wrong, but what I can tell you is that an alarm goes off in my head when I start seeing everyone saying nothing can go wrong. And so that's the hard part of the analysis, is that a lot of really smart people that I talk with, they say, listen, I get why it's going up. I get why Saylor's doing what he's doing. All of that makes sense. It's very rational, both in terms of why people are buying it, why people are buying the bonds, and why he's buying Bitcoin. So you kind of like check all those boxes. The irrational thing is the blind belief that there is no risk. But if you go and you ask someone, what are the risks? And they tell you zero, I always think to myself, it can't be zero. Because I can tell you really extreme risks. Is if the United States banned Bitcoin. Do you think MicroStrategy stock would crater? Probably. I don't think that's going to happen, right? But that would be like a super extreme thing. So you're like, okay, at least we now have all common ground identified that there is a potential risk that we could identify, even if we think the odds of it are 0.00001%. Nobody has been able to raise their hand and say with a high degree of confidence, I found the risk. And so you got to ask yourself, could there be such, low risk? This really is a new thing that we're all underestimating. Maybe, but I think that's where the market is trying to figure this out. Is it simply so easy where you just sell your stock at a premium, you buy Bitcoin, Bitcoin goes up, you sell your stock at a premium, you buy Bitcoin, Bitcoin goes up, right? Like that's pretty interesting if that is what could happen.
Pompliano dives into the M2 global money supply and its impact on Bitcoin. He highlights a critical insight. Bitcoin moves in sync with liquidity. When the global money supply expands, Bitcoin rises, and when it contracts, Bitcoin drops. Pompliano explains how this dynamic has been true since September 2023, with Bitcoin's price lagging about 70 days after liquidity changes. He underscores Bitcoin's unique position as a global asset that reacts to worldwide liquidity, unlike US stocks, which are more tied to domestic factors. Despite recent fluctuations, Pompliano remains confident that we're in the midst of a Bitcoin bull market. This trend shows no signs of reversing, even with minor corrections. Stick around, because the insights in this interview will change how you view Bitcoin's future.
If you go and you take the best returns in a given year or in a given asset class, probably about half of them are people who with traditional training who come out of an incumbent type organization and they're adapting to the new world. And then about half of them are new and they're saying, hey, I don't have any of that stuff. I'm coming at it, completely organic or native to this world. That's fascinating to me. And I think that Bitcoin really sits at the center of a lot of that. Intellectual humility is an essential skill going forward. Bitcoiners have had to learn this, I think, the hard way, because everyone shows up to Bitcoin and it's the classic, I'm new to Bitcoin, I'm here to fix it. And those people just get run over. And some of them realize that and adapt and change and get back on track. Some of them just get thrown to the side and get forgotten. But I do think that the same is true in the media or investing in general, is that people are realizing, wait a second, I have to constantly keep learning. I have to constantly keep adapting. I mean, think of Bitcoin. If you said to yourself 5 years ago, okay, I understand Bitcoin, I can tell you exactly what's going to happen, and you never updated your quote unquote models, so your mental model or an actual financial model. Well, now the ETFs are here. Completely new game. MicroStrategy is here. Bitcoin miners are doing all kinds of things in the market. It's always evolving. And so you have to have the intellectual humility of like a student, not the teacher. So naturally, what happens? Somebody says, that MicroStrategy thing seems to work. So MetaPlanet in Japan says, why don't we do it in Japan? We could arb the yen and we've got all kinds of advantages. Let's do that. And then Semler Scientific says, well, why don't we just do exactly what he's doing? And they start to do it. And so you start to get people doing it. Then you see somebody like Hut 8 or Marathon or a Riot come out and say, why don't we leave some Bitcoin on our balance sheet? Why don't we not sell our Bitcoin that we're mining? Why don't we borrow money or raise capital to buy more Bitcoin? So they start to do it. Then you have somebody like a DeFi Technologies that says, well, if we can put one asset like Bitcoin on our balance sheet, why don't we put a lot of these assets on our balance sheet? And they go and they put 5, 6, 7 different assets on their balance sheet. And they say, hey, we're going to be more of an index for the whole industry. Because I think that they are pioneering a brand new space in public markets that is going to marry old business models. DeFi Technologies has ETPs. That's been around for a long time. Hut 8 has energy infrastructure. It's been around for a long time. Sol Strategies has the equivalent of the mining business, right? And these validators. That is a business that people understand in terms of drawing cash flows, etc. It's no different than like a gold miner, right? But those three companies are also pioneering using their balance sheet as a third lever, similar to MicroStrategy. And so today, maybe those three are the three I pay the most attention to because I'm helping them, but maybe there's going to end up being 100 or 500 of these companies. When I was talking about this yesterday, got a bunch of inbound of people with different variations around the world. It's interesting. And so my guess is that what we are watching is MicroStrategy is the pioneer on balance sheet as a third lever. These other companies are starting to try to take that idea and customize it to whatever their business, their focus is. But we are at the dawn of MicroStrategy for X, and you're going to see a lot of people do this. because people are realizing it works. It goes back to our earlier conversation though. What are the risks? And so the obvious risk that no one talks about is just the prices go down. And so if you do MicroStrategy for X and you pick some shit coin or some meme coin that goes to zero, it's not going to work.
Pompliano's analysis of Bitcoin's sensitivity to global liquidity is a game changer for anyone watching the market. His confidence in Bitcoin's bull market despite short-term dips proves that long-term investors are in for a massive payoff. Stay tuned for more updates because Bitcoin's future is brighter than ever.